What's up, everyone? All right, in today's episode, I'm going to give you my watch list for Monday morning and the game plan for the week ahead. Now, I am super excited because Monday is day one of my brand new small account challenge. That's right, I have reset my account back down to $2,000, and we're going to see how quickly I can grow this account. Remember, all of the profit will get donated to charity. So my goal for day one, optimistically, is to grow the account by 10%. So $200 of profit is the day one goal. And honestly, if I can do $200 a day, 200 a day is $52,000 a year. That would be phenomenal. Now, obviously, 200 a day is a lot more difficult when you've only got $2,000 in the account. After the first 15 or 20 days, when the account's up to 3,000, 4,000 and higher, it becomes less of a challenge to make $200. 10% a day that's quite a bit. But what we know is that almost every single day, we will see stocks that make moves in excess of 10%. So if I can find one of those stocks each day that's making a big move, I don't have to have a perfect entry. If the stock goes up 50%, all I need to do is capture a sliver of that move, and that can be enough for me to hit my daily goal. Now, for those of you guys who have not already done a 2-week trial, this is a great opportunity for you to take the leap, do the trial, and watch over my shoulder as I attempt to grow this small account. During your 2-week trial, not only will you get to watch me as I'm trading, and I'm going to jump on the screen share here so you can see what you'll be actually seeing tomorrow morning. You will see my Webull account right down here in the corner. So this is the account funded with $2,000. You will see my orders, my open orders, and you will see my positions right here when I start trading in it. But as part of your 2-week challenge or 2-week trial, you'll also have access to this software right here. So you'll log in, you'll sign your market data agreements, and then we'll give you access to real-time market data. So you'll have charts, you'll have scanners, you'll have the news feed, and then of course you'll have the chat room and my live audio video broadcast. So if you haven't already done it, I'm going to put a link. It'll be pinned to the top of the comments and in the description where you can do this 2-week trial. So as I'm embarking on this third leg of small account challenges here, I'm thinking quite a bit about how I should approach it. And I'm curious what you think on this subject. On the one hand, I could focus on taking just one trade a day. We often say one trade a day is the small account way, right? Take one really good trade, get in, get out, and then get out, hands off, and you're done. You reset, you do it again the next day. Since my accuracy is averaging this year about 70%, if I do one trade a day, then what we know is that, and I'll just pull up my metrics here year to date, what we know is that over the course of 10 days, I will most likely have 7 winners and 3 losers. Now, I don't know that, well, on the one hand, I actually think my accuracy could be a little bit higher. During the small account challenges that I've done this year, my accuracy was closer to 80% because, when I'm doing a small account challenge, I'm really trying to focus on trading the best. So it's possible over 10 trades that I would actually have 8 winners and only 2 losers. Now, if each of those winners give me the opportunity to grow the account 10% each time, then all of a sudden, those first 8 days, if I was lucky enough to have 8 green days in a row, the account could be in a really nice position going into the end of this week and then into next week. However, if I just have the misfortune of starting with 2 red days, then all of a sudden the account is dipped down. And so since I'm risking 10% of the account, if I lose $200 tomorrow, I'll have $1,800 on Tuesday. So then growing the account by 10%, $180, not $200, right? If I lose another $200, I go down to $1,600. You see what I'm saying? So if I have drawdowns, it's going to make it even longer for me to make that money back based on the goal of 10% per day risk and 10% profit. I think that I can feel pretty confident that I'm going to be in a good position tomorrow because the last few weeks we've noticed that Monday, Tuesday, and Wednesday have given us the strongest moves before it's kind of cooled off going into Thursday and Friday. So I would actually be okay this week if I only see good opportunities on Monday, Tuesday, Wednesday, and not taking any trades later in the week. That would be fine. It's not preferable, but I could tolerate that as long as we do get some good opportunities tomorrow. Now, if we look back at last Monday, we had GLTO, which gave us this pretty epic move. This was our biggest move actually of the week, and it was Monday morning at 7 a.m. So we started Monday last week just with this huge squeeze. The stock has news, and it goes from $4 up to 5, up to 6, up to 7, up to 8. So it's already up 100%. Then it goes up to 9, 10, 11, and 12. Now it's up 200%. It goes up to 13, to 14, to 15, to 16, to 17, to 18. It dips down and it squeezes all the way up to $26 a share. If I could be so lucky as to have a move like that tomorrow, it would be phenomenal. But remember, it's not like I would get in with $2,000 down here and I would sell right here. That never happens. You never get a perfect entry and you never get a perfect exit. So realistically, I'd be in, maybe around this first pullback down there at 8, and I'd probably be taking profit, to be honest, around 10. It would probably be like entry and exit, and if it goes higher without me, that's great, but it's really important for me to focus on growing the account. Consistency is what it's all about. That is my small account strategy. It's to focus on being consistent. Now, if we look at my win-loss expectation just from the year, I'm the type of trader who shows up every single day, and rather than hitting home runs, I just get on base. I just hit a lot of base hits, thousands of base hits, but they add up over time. And as long as my accuracy is high, I can feel pretty confident that over the course of 10 trades or 100 trades that I'm going to have some good profit. So there is a little bit of a question for this challenge of if I should focus on taking just like one really good trade each day, and then that's it. Or if I should split up my buying power so I could take, 5 or 8 or 10 trades, but each one is going to be smaller. This is a challenge that I think small account traders always are faced with. Since I'm using Webull and we have 0 commissions, there wouldn't be a lot of downside to spreading out the risk across 10 trades. That way, if, I do have a loss on that first trade, I don't have to wait until tomorrow to take, additional trades. But on the other hand, there is a bit of an opportunity cost in that if I see one really good setup and let's say I already blew most of my buying power on sort of, B quality setups, I won't have the money there to really capitalize when it counts. So I think for me, my approach is going to try to be patient and just to look for one really good trade each day. That might mean I hesitate a little bit on one that I'm not sure about. It's okay, but I don't know. But then when I see one that I like, I think I'm going to go all in. I think that's the way I'm going to approach it. So that sort of simplifies things in a way for me, because instead of trying to find 10 trades that, meet my standard, I really only have to find one each day. One trade, 10%. That's the goal. Can I do it? That's the question. Well, if history repeats itself, I have a good chance at doing it, but it's not surprising to me if there will be, or it won't be surprising if there will be some bumps along the way. There typically are during these small account challenges. So I adjusted my layout here a little bit for this challenge. I kind of wanted to just change things a little bit here because I'm going to need to have this window here in the bottom corner, and this takes up a little bit more space than the typical broker that I use for trading. So this is what you guys are going to see when you log in tomorrow morning. And the stocks that I'm thinking about, basically what we had on Friday was a relatively light volume day across the board. We didn't have a ton of really good momentum. The overall market initially was not looking super good on Monday morning. We were selling off in the pre-market session from a sell-off that began sort of on Thursday. And so when we first sat down on Friday morning, the market was gapping down. So it opened way down here, but then ended up rallying back up and sort of filling this gap coming back up, which is good. But the market is obviously a little bit off its highs, as you can see right here. So we're kind of stair-stepping down, but at least we didn't make a new low versus this pullback here. So, not great, but obviously could be worse. So that was the overall market in terms of large caps, the S&P 500. Now, in terms of small caps, there were some lower price stocks that were moving. Let's see, this is one that was moving a bit. CYCU, 2.4 million share float. CYPH, a 48 million share float. It's definitely moving. It's cheaper. So in some ways, this could have been a good one for the small account. But unfortunately, the price being a little bit cheaper, it ended up, and the float being higher resulted in the stock being a bit more of a grinder, being very crowded. And these types of stocks can be okay for buying dips, but they're not as great for trying to do breakout trades on, because often what happens is that sellers are already lined up to sell into all of those breakouts to take profit. So unless you can get into the mentality of buying dips, a stock like that's going to be more difficult. And so for me, I don't think a stock like that would be ideal for Monday morning. Now, one of the scanners that I like to check is the after hours top gainers scanner. So this shows us moves that began in after hours on Friday. And then we can ask, is this something that's worthy of consideration going into Monday? So GNS, Singapore company, listed on the New York Stock Exchange, 58 million share float, goes up 50% in after hours. Okay, that's great, I guess, but unfortunately for me, the float's a little bit too high. The price is a little bit too low. That's not a great combination. This isn't the type that I would typically do very well on. So I'm going to say no to that. And then RPTX is up only 30%. And unfortunately, 24 million share float as well. That one's not going to work. So we don't really have any stocks from Friday that I'm watching for an opportunity on Monday morning. Now, we do have a couple other scans that I flipped through to try to look for ideas. We've got our recent reverse split scanner right here. This sometimes will give us some interesting ideas, but oftentimes these are just side chart kind of possible watch list ideas while we wait until the day the company actually puts out breaking news. So I've looked through a lot of these. You'll notice a theme, recent reverse splits. Look at the floats. A lot of these floats are very low. And so if we have a day with high relative volume, that's when things could get exciting. So CYCU, I guess a somewhat recent reverse split back here, but it's a little ways back from October 27th. So at this point, it's already moved up a little bit too much. So one of the things I typically will do is I'll just glance at the stocks that are on this list. So GNPX, for instance, it doesn't have much volume intraday, not much going on. I look at the daily chart. I see it was the split back there and has room up to the 200. So if I see GNPX hit my scanners, I'll remember, that's a recent reverse split. AEMD, also recent reverse split, has room up to the 200 moving average if it starts to curl with news. YGMZ, pretty recent split, room to the 200. This is typically what we look at. SENS, not as much room on this one to the 200. That resistance is going to be probably too close. IOTR, this one popped up, it looks like just the day of the split. So that kind of ruins the pattern typically. Would probably disregard it. But again, if it has news, I might take a look. Ray, a lot of room to the 200. That's a possibility. So these are all just worth keeping in mind in case we have a day where it pops up. So in fact, anytime something hits the scan, one of the first things I'm checking is the daily chart. And I'm looking to see, is there a somewhat recent reverse split? Because if there is, then I want to pay attention to it. And if there's not, then, okay, that's just something to factor in. All right, so those are our recent reverse splits. Now, I'll sometimes check my recent IPOs. However, right now, to be honest, we've been in kind of a theme where IPOs have not been working well at all. So it makes me, this is a recent IPO, and look at this daily chart. It's kind of pathetic. It doesn't get much worse than that. It has just gone straight down. What was even the point of doing an IPO? Well, maybe just to sell, just to bail out. I don't know, but that one's really bad. EPSM, this one, daily chart is not that much better. So unfortunately, when we see these recent IPOs, and this one did actually have a big move, which is sort of interesting. So I forgot about that. So this one was a recent IPO, and then boom, it exploded, went from $20 to $150, and then gave it all back and is now coming back down. So, those are the types of days that we're interested in trading it when it's making a big move. But this one did it, and now it's over. And these floats are higher. I'd have to check the filings on this one, but it's $17. It's a little more expensive, certainly for the small account challenge. So we checked our recent IPOs. We checked our recent reverse splits. The continuation scanner, I'll sometimes pull this up just to see if there's anything here that's worth watching. GLTO is still holding up, but it's $30 a share. So this one's going to be too expensive for the small account. And even for my big account, the risk is just a bit too high with these higher price stocks. So I think the thing that you could recognize is that if someone shorted this, shorting, didn't really go all the way back down. So maybe they didn't get a chance to cover. Then it rips up here, and then back up here, almost looked like it was going to explode, but then it kind of started to unwind. And then it held support, rallied back up, and then tried again to fail, but it just couldn't go lower. Rallies way back up. Probably some shorts got squeezed there on that move. And then maybe they reposition for another fade, but man, this thing is just still holding up. So if it breaks out again, at what point does it squeeze out people who are holding it short and waiting and hoping for it to go back to like $5? So you could have a short squeeze on it, but I just think because the price is higher that a lot of retail traders will leave it alone, and that'll limit the amount of buying that occurs, which will make it probably less likely that you have a really big short squeeze. So I think the price is going to be the factor there. Again, unless it comes out with some phenomenal news, but that could be an issue there. CYPH, already looked at that, floats a little higher, so that one is not good for me. MRSN, this one's a little more expensive as well. Oh, but it's a buyout, so that one's going to be out of play. RDGT, nothing there for right now. CMCT, this one has popped up a couple times. Also on the daily chart, shows that it would be interesting if it if it was able to break over 12. If it broke that level, high volume day here, and then really light volume. That's actually an interesting theme. Look at this stock move, 46 million shares of volume. The next day, 1 million. And now all the way back to 73,000 shares. So traders are really abandoning stocks when they're no longer moving higher. GLTO, 43 million, and then 14, and then 4.5, and then 2, and then 700,000. The one thing I'll say with GLTO, however, is that if someone was short this stock, a big position like 200,000 shares or something like that, they might find that it was easy to accumulate those shares to the short side when the volume was really high. But to try to get out of 200,000 shares when the volume has gone to nothing could be very difficult. And they could get really bad fills, which next thing you know, they're trying to cover as the stock is squeezing up and it halts up. And suddenly they could have a margin call and their broker's filling them at like $45 or $50 a share. And we've seen that happen before. So usually, when you have the volume decline, but the stock also kind of fades, then shorts are sort of covering and the interest goes away. You don't have to worry about them. They don't have to worry about getting squeezed. But when the volume declines, but the price just stays right up near the top, then it's like, we're just waiting for the next headline to come out and send it. And those shorts who are still holding and getting stubborn, they might have a problem. So it's something to be kind of, thinking about there when you see a daily chart where the price is still holding up even after a big move. So MOVE, this one is pulled back too much, is back below the 200 moving average. But GLTO, although it's not great price for me, is probably worth keeping an eye on. And CMCT is probably also worth keeping an eye on. This kind of rally here from 650 up to 11, which ultimately was on very light volume, sort of exemplifies, how quickly these can move. And this was on like 1 million shares of volume. So if someone was short some big size on that, it could get bad pretty quickly. We're not in a market where we've been seeing a ton of like multi-day momentum, like stocks that keep going day after day after day, where shorts are just getting really squeezed. It's been more of you get 1 or 2 really nice moves intraday, and then that's kind of it. So that means we've got to make the most of the opportunities that we have. And that's also part of my reasoning for wanting to consolidate my attention on taking like one really good trade and then, waiting and being patient and then striking when I see it. So I would say best bet of finding a good trade for tomorrow is going to be logging in and watching this top gainer scanner. Now, it may be that we log in and we see the top gainers are penny stocks, stocks that are 50 cents a share, 40 cents a share, whatever. And if that's the case, that's going to be really tough because although you could argue that those are perfect for a $2,000 account, put the whole account into it and, it maybe goes up 50% in a day or 100%. The only way that would work is if I bought and just walked away from my computer and came back and was magically up, and that's not a good strategy, because I would be putting, way too much emphasis on just luck, sheer luck. Because typically when I trade those lower price stocks, I'm looking for breakouts. I want to get in and get out quickly because I'm putting so much money into it and such a big position. I just don't want to walk away. But when you get in and get out, you don't usually get big breakouts. So I just don't know that I'm going to end up actually having a good trade if I take that approach. So I think I'm going to still focus on stocks at least above $1 a share, but we'll pay attention to the theme. So tomorrow I'm going to be asking myself, I'm going to sort by volume. Where's the volume? What are other traders looking at? And then that's going to answer a question for me. Okay, on Friday, it was higher float stocks. A little unusual, price between, $1.50 and $3. Interesting. Not my favorite cup of tea, but that's where the attention was. So if the attention in the market happens to be in an area that I don't care for, I just have to acknowledge that. There's nothing I could do about it. But what it means is that if I see something that's A quality for me, but pretty much everyone is focused on one of these penny stocks, then we probably won't see good resolution on the stock that I like, because there's other stocks that are more popular. So my best bet will be like we had on Monday, GLTO or Move, where the stock that is the most obvious in the market also meets my 5 pillars of stock selection. That's when things look really good. So for those of you guys who don't already know my 5 pillars of stock selection: price, number 1, relative volume, percentage change on the day, the float of the stock, and the presence of breaking news. Those are the 5 things that I look for. And so for me, the price parameter is between $2 and $20, but for the sake of a small account challenge, I'm really going to be focusing between 2 and 5. Even something that's 7 or 8, I just wouldn't be able to buy enough shares, I feel like, to make it work. You could argue, look, if it goes up 10%, 10% is 10%, whether it's a stock going from $2 to $2.20 or $6 to $6.60. But if you're an active trader, it's a lot easier to get 20 cents a share than it is to get 60 cents a share, average for the whole position. So I'm more likely to get those bigger percentage gains on lower price stocks, unless we're seeing just epic parabolic momentum where a stock has great news and is like going from 4 to 450 to 5 to 575 to 625, and it's just skipping half dollars and whole dollars like it's flying, which can happen, but I don't know if I'm not expecting that for Monday. So this small account challenge does come at an interesting time because the market is not really calling for me to be super aggressive right now. Last week in my big account, I was green, but I didn't crush it. I didn't do anything really that phenomenal. It was relatively small green days, but this is the reality of trading. Sometimes when you sit down and you fund your account, the market's not that hot. You could choose to just sit on the sidelines and wait, or, you break the ice. The challenge is, if you're going to break the ice, can you also have the discipline to restrain yourself? So if things are choppy, you don't just give back a ton of money when the market didn't really call for taking a lot of risk. So that's the thing I really have to think about: breakout or bailout. But I'll tell you that when I see a stock that starts moving quickly, that's when I'm going to get excited. If I see a stock tomorrow morning, or really any day in the coming week, and probably further, that pops up and it's just immediately grinding, is just sluggish, has big sellers, I'm just going to say, you know what, forget it. There's obviously people that are dumping the shares of this stock, whether it's insiders or it's a secondary offering, a direct offering, or it's shorts, we don't know. But if the stock is just not going higher, I'm not going to fight that battle. I'm just going to say, no, I'm not even going to touch it. So for me, to be honest, the first thing that I need to see in order to even consider something to be worth trading is a candle that looks a little something like that, right? A candle like that, that'll get me excited. From $5 to $7, first pullback, and then from $7 to $9, those are the types of candles that I want to be trading. That's where I'm going to make good money. And anything else is just, borderline not even worth it. Now, it's easy with commission-free trading to say, oh, well, I don't even pay a commission, I might as well just break the ice. But when you have a cash account and you know you're going to run out of cash, you've got to make each trade count. All right, so with that, we've got a little bit of a game plan for Monday morning. It's going to be watching our top gainer scanner here, watching the small cap high day scanner, and of course, day one of trading with $2,000 at Webull. Those of you guys who have not already checked out our 2-week trial, link is pinned to the top of the comments and in the description, so make sure you guys check that out. Those of you guys tuning in, hey, reminder, I hope you subscribe to the channel. I hope you hit that thumbs up, and I'll see you guys streaming bright and early tomorrow morning at 7 a.m. Eastern Standard. Reminder, trading is risky. My results aren't typical, so please take it slow, and always manage your risk by practicing in a simulator before putting real money on the line. All right, guys, I will see you bright and early Monday morning.